Welcome to the Levon Resources presentation in the AGORACOM online Gold and Commodities Conference. I am Ron Tremblay, President and CEO of Levon Resources, and I will be presenting our company to you today, as well as answering any questions posted by investors who are watching the presentation at our scheduled time. If you are watching this presentation outside of our scheduled time, please post your questions as we will be checking in over the next couple of days to answer them. Before I begin, I would ask that all of you take the next 10 seconds to review our disclaimer, which you can review at any time by coming back to this slide. Prime regions, prime projects, intelligent exploration. We have outstanding mineral properties in Mexico, Nevada, and British Columbia. Levon's projects are strategically located in politically stable regions of North America. We have a large porphyry target in Mexico. We have a gold project, several gold projects in British Columbia and Nevada. We're well funded for current programs, and we have very aggressive management. Just showing the drilling project that we just completed in Mexico. We have excellent infrastructure at the Cordero-Sanson project in Mexico. We're 35 kilometers northeast of Parral, which is a major mining area. We have a major paved highway. We have a airstrip 10 kilometers away, and we're on private ranch land behind locked gates. Cordero is a district play. We have discovery potential for multiple bulk tonnage, silver, gold, lead, zinc deposits. We've just increased our land position to 20,000 hectares from 10,000 hectares. And the main mineralized area that we've been focusing on is a 6 by 3 kilometer porphyry belt of 4 mineralized porphyry intrusive centers. And our new acquisitions will add an additional strike length of about 7 kilometers to the Cordero porphyry belt. Analagous deposits in the area include the Penasquito mine, which is owned by Gold Corp. What happened was it was owned by Western Copper. They did the discovery, and then it was bought by Glamis Gold for, they spent $20 million to prove up the property, and then it was bought by Glamis Gold for $1.2 billion. And then Glamis was bought out 6 months later in 2006 for an equivalent of about $9.2 billion by Gold Corp. So it's very exciting. Camino Rojo, which is also in the area and was just a recent announcement, which is Canplat's play. And it was just recently bought out also by Gold Corp, or they've made an offer to buy it out at $3.50 a share, which works out to somewhere in the neighborhood of $240 million. But they only own part of the deposit. Part of the deposit sits on Peñoli's ground, so that's why they didn't get maybe as much as they might have got for it. Then you have the Pitarrilla mine by Silver Standard, which is not too far away, and another pretty analogous deposit, similar. We just completed a drill program in 2009, which was our first drill program. We had some outstanding grades and intervals, particularly in hole 5, which returned 152 meters, grading 80.6 grams of silver, 0.61 grams per ton gold, and 1.4% zinc and 1.22% lead. And that hole also included 72 meters of 150 grams of silver, and better than a gram of gold, 2.48% zinc, and 2.27% lead, which is outstanding, better than any of the holes on Penasquito or those other deposits. We did a widely spaced program designed to test 5 targets within 3 of the 4 mineralized intrusive centers, and the idea was strictly to test it. So we weren't looking for trying to find a deposit, drill out a deposit or anything like that. We're just strictly testing the various areas to see what we came up with, and every single hole returned mineral values, and some were extremely good. Just referring to the project comparables, our bulk tonnage drill holes are broadly comparable with the other Mexican bulk tonnage deposits. Here we're showing the drilling that we did and the net value using a net smelter return based on the net value formula on the bottom of the page, which would be $14 for silver, which currently silver is at $19. Gold at $9.75. Currently gold's at $1,200. Zinc at 90 cents. Currently zinc's over $1 and lead's over $1. So, and then we're using a 70% net back and a 50% net back for zinc. And so that's where those values came from. And you compare those numbers from those holes to Gold Corp's net value and Silver Standard's net value and Canplat's net value, and you can see that our numbers are much better than any of theirs. And then you look at the discovery hole comparables with Penasquito. Their best hole was $87, and we're looking at $111. And then their next best hole was $45, and we're looking at $62 net value. So you can see from that we're definitely in the right ballpark, and we definitely have the right metal assemblage, and we certainly have the values. The drill hole 5, we're just showing some of a little bit of the core with a pen just to show the comparison size of the drill core. This is a brecciated intercept in hole 5, and you can see the zinc and the silver sulfasalts in there, and it's a very rich intercept, and that went on for about 150 meters, I think. 150 meters, so over 300, 400 feet almost. So it was very rich intercept. What's next? Well, our Phase 2 exploration is expected to start in January, and we'll focus on offset and grid drilling around the best holes of Phase 1, which would include around hole 5 and around hole 8. And then we'll complete some first-round exploration drilling of other targets for bulk tonnage in the main district in the 3 intrusive centers, with initial outlying exploration targeting on new land additions that we just staked. Moving on, another property that the company owns is the Norma, Sass, and Rough claims in Nevada, which is next to Barrick's Pipeline deposit. And you can see from the photo that we're very strategically located right next to the pipeline pit, and we've done an exploration agreement with Barrick whereby they will spend somewhere in the neighborhood of $6 or $7 million to earn about 70% into the property. And then I think I'm not sure the exact terms, but I think if they spend another $1.5 million, I think they and carry us to production, finance us to production, then they get a total of 75%.